name is Stéphane Pesch and I'm the CEO of the Luxembourgish Private Equity and Venture Capital Association, which was created in 2010. So our core mission is to represent, defend and promote the interests of the industry and of our members.
I'm the Deputy CEO of AM Investment, which is a private equity fund based in Luxembourg, and also the partner at Antwort Capital. Luxembourg will become, I think, a worldwide hub for private equity, not only because of the service provided, but the talent that is present.
My name is Mickael Tabart. I'm a partner here. I've been 25 years with the firm. I'm leading the private equity audit practice. Let me just confirm that Luxembourg, that is also echo for my clients, is the #1 jurisdiction for private equity in Europe.
We were founded in 2019 in the US, headquartered into Singapore, where we launched on the back of our partnerships with governments and innovation advisory agency. Luxembourg is the perfect home for the back office. And I'm a champion of digital transformation. I'm really looking forward to disrupting the entire Luxembourg ecosystem.
My name is Marc Boulesteix, so I'm head of Eurazeo Luxembourg. I think private equity and manager have a strong responsibility to implement ESG in the real economy.
I'm Julien Frighetto, CEO of Talent Resourcing, an executive search firm specializing in financial services in Luxembourg. It's almost like a revolution, I would say. So we will have more investors, more assets, and consequently a bigger need for workforce to handle them.
Luxembourg has long been a leading player in the world of international finance. Since the 80s, the country has strategically positioned itself as a global financial hub thanks to its investor-friendly legal framework, unwavering political and economic stability, advantageous geographical location, expertise in asset management, and the diligent oversight of the CSSF. These factors have collectively drawn investors from every corner of the globe to the Grand Duchy. More specifically, Luxembourg's ascent in the world of finance took a significant step with the establishment of the SICAR in 2004. This move paved the way for the emergence of private equity in the country. At a later point, the industry truly gaining substantial traction in 2016 thanks to the introduction of reserved alternative investment funds. This innovative investment vehicle further solidified Luxembourg's position as a prime destination for global investors seeking opportunities in the ever-evolving landscape of financial markets. Talent Resourcing operates as a specialized recruitment agency and executive search firm within the realm of financial services in Luxembourg. One of our primary objectives revolves around advancing and endorsing the local financial sector. To fulfill this mission, we have engaged in extensive interactions with a diverse array of industry stakeholders and experts who actively shape the landscape of Luxembourg's private equity sector. Moreover, at a time marked by a convergence of geopolitical instability, inflation, talent shortages and regulatory changes, notably ELTIF 2, we aim to present a documentary that provides an update on the current situation and delves into the state of private equity in Luxembourg. To shed light on these critical questions, we've connected with some of the foremost experts and accomplished professionals who are playing a crucial role in shaping Luxembourg into an indispensable European hub for private capital investment.
It has evolved quite well, so it has really grown a lot. And since the introduction of the AFMD in 2013, we have seen that also with the LPEA members, because we continuously grew over the last years, and with the limited partnerships with the RAIF, so the Reserved Alternative Investment Funds, and also the effects of Brexit, that has really been accelerating over really the last years. So nowadays we have not only the teams here, back office, but also the flagship funds and also the investment managers or the management company here in Luxembourg with different tasks. And we even now reached over the last days 450 members who were part of the LPEA. If you look back in 2010 when the association was created, we were just 25.
It's very simple. We have, I think, around 5 trillion AUM, or all type of funds in Luxembourg. And the fastest growing segment is private equity. I think in 2021, they grew by 21 or represented 21% or 29%. So I think we see also with the service providers that are around, they're becoming more and more experienced in handling illiquid assets, because until now they had a huge experience in UCITS. We see that developing, extremely well, the legal framework. And I think until now, Luxembourg, as I can see the other questions, was more of a back office, so it's moving towards a middle office. So we have the large funds here in Luxembourg, be it the Carlyle, Astor, EQT, they're all present in Luxembourg. And it's not only their back office team, their investor relations team, and we can talk about it later. And Castic, all these funds, mid-cap funds are really in Luxembourg.
Clearly, Luxembourg is a place to be when it comes to private equity and real estate funds. It's a jurisdiction which is favorite route, I would say, for our clients, for our LPs. So it has been quite an obvious choice for the group to establish a stronger presence in Luxembourg, but we have been here for decades, actually. First through SPV in order to structure, let's say, European deals, and now we have a certain number of funds.
Let me just confirm that Luxembourg, that is also echo for my clients, is the #1 jurisdiction for private equity in Europe. As a domicile. You may discuss about the numbers in a private, industry, but still, when you look at the number of funds, AUM, also talking to clients, 18 of the 20 biggest PE houses are in Luxembourg, so this is clear. It's true that we still have this, the view that it's mainly back office, middle office. Even though we have big players now, beefing up their activities on investors reporting, but also sometimes on deal.
In Luxembourg, I would say the opportunities is that really we move from a back office, middle office to a front office. More and more, as I was mentioning, the investor relations teams, the distribution, etc., from the alternative industry is more and more moving to Luxembourg. So we're seeing this. Also such services as the valuation services. So all this around, I think this is an opportunity to eventually at some point also have the investment teams in Luxembourg. At the moment, they're in Munich, London, Paris, and I think that would be the opportunity.
I would say Luxembourg started specifically with private equity and venture capital with the famous SPVs, those special purpose vehicles, the holding companies. That evolved, thanks to the AFMD we mentioned before, into a fully fledged fund center, which now has also the fund managers here locally, at least the management company, and also then the different flagship funds. So that's a great progress, and that allowed the model also in Luxembourg to evolve into a very strong middle office, where then you find some new tasks and professionals who are working, for example, in risk management, valuations, compliance, and also sometimes CFOs, and also a few analysts.
We used to be more back office, now we are more focusing on middle office. Indeed. Personally, I don't believe that we will have investment teams in Luxembourg, or a small number maybe of investment team, but for fundraising, for marketing, for risk management.
Even though Luxembourg may not be fully prepared, it has a competitive edge over other European countries and can draw inspiration from what has been done in the past with UCITS funds. Private equity has an even stronger international orientation compared to other professions in the local market, and therefore it can tap into a pool of talent at an international or European level. As a headhunter focusing on the private equity sector, I can attest that this industry is more open to international recruitment and, in certain cases, has no other choice but to hire abroad.
The beauty of Luxembourg, it likes to reinvent itself and also, make the changes on a quickly manner, make quick decisions to attract this great profile. So there are, initiatives at the different levels, the LPEA, but also different associations, to attract, this high profile of investment team.
It depends on the different members. So if they have large operations, they have the capacity with their HR teams to go and visit, let's say, the best universities all over Europe. They have campus managers. They attend different international conferences. They participate, for example, also to some of our events like our job fair or our training academy. They send their own people there. And finally, they're also looking not only in Europe, but also where broader directions.
We are proud supporters of partners like Forban, who we helped to land here. We've seen Fundcraft now digitize their back end. We've seen Delio Group digitize backends for really high value private banks and alternatives. And we believe that this is the future. Anything that is manual is just full of risk, right? Human risk. And so we believe in one back office automation. Luxembourg has so much potential. If the industry adopts full digital transformation, we can iron out a huge amount of risk in the ecosystem, and we can all drive better performance, because it will change who makes the decision, when it's made, where it's made, why it's made, and how it's made, and realign incentives between the managers and their LPs. They want lower costs. We want better performance. We want greater diversification. Greater diversification means more numbers of investments under management. More numbers of investments means more operational back office management. And we need to be able to scale that efficiently and cost effectively. And most importantly, with 100% transparency for our limited partners and our regulators. So I think that is indeed Luxembourg's biggest asset and biggest opportunity.
As we navigate through the world of private equity in Luxembourg, a pivotal topic emerges on the horizon, a topic that spans across all sectors of the economy and is already impacting the daily lives of individuals. ESG. What role does environmental, social, and governance factors play in this thriving financial sector? How does this set of criteria used by investors, businesses, and organizations to assess the sustainability and ethics impacts an investment or business decision? Let's shift our focus to explore the intersection of sustainability and investment strategies in this dynamic landscape.
Private equity industry is a fantastic one. It's a very exciting industry where you see so many different things happening. I don't see there are so many interesting things to see people investing in a small company, turning in a different one, better one, exiting. People see, the benefit of private equity to fuel the economy. In Europe, for instance, 90% of the business are privately owned, small business, where the employment is. So private equity is essential to fuel this economy and to help these companies.
And I think private equity and manager have a strong responsibility to implement ESG in the real economy, I would say, through the portfolio companies, because we are investing in, from very small, so venture growth, and small, mid, large, so the full range of company, but especially not the big corporation, and we have a clear expertise, and we help them implementing those ESG goals and make a real change.
I think in Luxembourg, the ESG Article 8 or Article 9 funds, it's still under development. So today, if you go to your AIFM or you want to launch ESG fund, the big four or the advisors, etc., they are learning themselves. There are criteria to fulfill, but it's not, it's not fixed. There's no benchmark. So everybody is, I think, still learning. So Article 8 ESG funds, there was a lot of greenwashing before. Now I think it is a subject. I think in for example, the institutional investors, they do a very big ESG due diligence as they do a financial or operational due diligence when they're investing in a fund. So I think the fact that your fund is ESG compliant will be, if there are 4 funds to choose from and one is ESG compliant, they're all 4 offering the same thing, I think it will more go to the ESG. Recently we wanted to, our ESG fund is going for Article 8 and then maybe Article 9. It's very vague still, what we have to provide, etc. So I think it's still learning, but will it become a criteria? Yes, I think. Does it impact performance? It actually, I think over the years, if you have ESG as a criteria for institutional investors, and I think the ESG labeled funds will be able to raise more funds, and obviously then the cost of these funds will be reduced, so the performance I think will be positively impacted over the long run.
We've seen for the last 10 years already some profile on ESG dedicated to the PE houses, to gather the data, looking at the portfolio companies, and do the reporting to the investors. And in my own view, this is the industry that will make a change actually on the ESG. Because if you think about it, without being provocative, owning a share of a listed company, does it make any change on ESG? I'm not too sure about that. But if you look at private equity, they have the possibility through the control of the company to make change in the processes, change in the management, change in the supply chain, change also with the supplier they work with. So it will make a big impact for private equity. So SFDR is the good thing, of course it is. Reporting, transparency, being everyone on the same page is good. But I think what the beauty of ESG is when you can actually make a change. And I think in private equity it will happen.
We believe that those extra financial reporting and criteria will be as much as important than the financial data in the near future. That is the future, and of course we cannot do investment anymore without taking those ESG criteria. So it's clearly a very important topic, a key topic for us as investors, for us and for our portfolio company.
You see more and more within the funds that there is a position of ESG officer. Yes, definitely, because if you have underlying investments who have to be compliant, so somebody has to implement this, check this, and do this. So there are ESG positions in the larger funds, mid-cap funds also. It's a team that is there. It's part of the team, and it's part of the I think DNA of each fund. In the future they will have an ESG officer. I think Luxembourg there has a good role to play. They can really develop their skills at this level also. I think this role will be, we already see it in the private sector that ESG officers are part of the board. I think that's something which will happen in the private equity also.
With the unveiling of the revised European Long-Term Investment Funds Regulation, aptly dubbed ELTIF 2, and its official publication in the Official Journal of the European Union on March 20, 2023, a profound shift in the landscape may occur. This alteration is ushering in a significant expansion of the potential investor base. In alignment with MiFID II, an ELTIF retail investor will enjoy equal standing with any other participant in the realm of financial instruments. Furthermore, the recent revisions notably eliminate the previous minimum investment threshold of $10,000 for initial investments in one or more ELTIFs. This transformation is heralded as a bona fide democratization of private equity. What potential drawbacks and benefits does this entail, and how does it influence the sector and employment in Luxembourg?
With ELTIF 2, we already have a strong retail investor base. 120,000 clients, retail clients. We are managing more than 3 billion funds of retail funds. But with the new legislation, ELTIF 2, ELTIF and then ELTIF 2, it's clearly an accelerator. We think that, with lower concentration rule for investor, no minimum ticket anymore, broader range of assets to be invested into. So the diversification rule, which are, less restrictive. So clearly, we see that it's going to be an accelerator for the retailization.
I don't like the word democratization or retailization. So I think with Antwort Capital, we're giving access to qualified investors, private investors, to illiquid assets. So I think now, even with the new law, you can invest up to starting at 100,000. Before it was, I think, 125. It's giving access, but I don't like platforms where you just go in and get access and you can invest in illiquid assets. I think it's very dangerous. I think the private investor has to be aware that he's investing in an illiquid asset. The secondary market of illiquid private equity assets for private investors is not that developed. It is developed for institutional, so you cannot go out of your investment as easy as you could, for example, in the institutional market for the higher investments, where you have really large secondary funds, but that market doesn't exist. So firstly, the investors have to be aware that their money can be locked up between 7 to 9 years. If they have a liquidity issue, which can happen, they will most likely recover their investment with a large discount and over a long period of time. I'm not talking about Antwort Capital, but iCapital, or there's so many others, or by their private bankers, that they really need to follow, help them and advise them clearly. And it should not represent more than 15-20% of your portfolio. It is the fastest growing asset, so it is correct to give access. So I think, yeah, democratization, that they get access, but in a controlled and regulated way.
Considering our success and the performance that we deliver over the years, it's clearly products that will be attractive, and we believe that it's going to be a huge, let's say, change in the industry because we will have access to the huge mass of savings, especially in Europe.
That's also indeed a very trendy but also a very exciting area for us. Just to step back a bit on why retailization has came up in the industry, that was considered somewhat as a club, a small club of institutional GPs, which was nice. That managing a company that has 50 people has nothing to do with a company of 2,000 people. So it's the same with private equity. Managing a short number of investors is very different than managing 1,000, 10,000 of investors.
For retail funds, one of the main constraints for us as manager is to manage the mass of investors. The TA, so transfer agent, and the management of the LP base and everything which is related around that topic is clearly let's say the main difference, because otherwise the assets are the same, and it doesn't change much compared to institutional fund. So the management of the retail clients, the client servicing after the commitment into the fund and the reporting, stuff like that, it's clearly the main topic that we are to focus on.
But there is an untapped, cash sitting there, and also as a philosophical question, I think retails, private wealth, family office should have access to alternative. There is no way we should ban this fantastic return for investors. If you look about that, the investors, retail, the number one investment usually is a house, and the liquidity is not the number one criteria for building a house. It's location, whether you will feel well in that house. For private equity, I feel it's about the same. Liquidity, is something different. You can manage liquidity through public funds, through cash, but then you should let people investing for the next 6-7 years, investing in real project that also make sense for them. So we need to address some aspect on risk management, having a good due diligence, on the right PE houses entering this market.
Luxembourg is ready for that. Of course, we have to adapt a bit because it's a different type of clients, but I think we have the competencies, experience to manage such a fund. And in terms of implementation of the law as well, Luxembourg has been definitely ahead of the competition, so it helps for ELTIF 2 funds, for instance, to be established first in Luxembourg. So yeah, definitely we have a key role to play in that space.
It is a positive evolution. So to have, let's say, the simplification concerning the eligible assets, to also have now fund-of-fund master feeder structures, and to invest for potentially also in fintechs, and also potentially to have no minimum investment ticket size. That is important, while still maintaining the possibility of having and combining then institutional or professional investors with retail investors.
It's almost like a revolution, I would say. So we will have more investors, more assets, and consequently a bigger need for workforce to handle them. However, before reaching that stage of development, the industry will require significant adaptation in terms of infrastructure, operational processes, and so on.
In the face of its innovations, merits and attributes, Luxembourg finds itself in a competitive arena with other European financial hubs when it comes to employment opportunities. The pressing question is, how can the nation bolster its appeal to attract a larger talent pool? In our pursuit of answers, we engaged a spectrum of interviewees to glean their insights and recommendations. Julien Frighetto, the CEO of Talent Resourcing, adds a comprehensive perspective to the discourse on talent attraction within the Luxembourgish landscape.
In this competition, Luxembourg has multiple assets. In addition to the usual assets regularly mentioned in the media, such as the international orientation of the country, its political stability and pragmatism, I would mention, in addition to this, the existence of a strong network of experts and the proximity of all stakeholders of the value chain, allowing doing things fast thanks to the availability of all types of expertise in the same place.
We have quite a lot of let's say threats or constraints, especially when it comes to human resources. I think that it's to maintain the attractiveness of Luxembourg. We have challenges because it's more and more difficult to hire high-skilled and high-experienced people. It's let's say a broad range of constraints, but the real estate market, very expensive Luxembourg, transportation for commuter coming from France, Belgium or Germany, the constraints coming from the regulator as well. Even if I'm deeply convinced that regulation is a very good thing for our business because it brings confidence to investors and especially for retail investors, so it's a very good thing. But it's always a question of where you set the tone, I would say. So we see more and more CSSF circular, new laws, new constraints, a lot of reporting. It comes with, so hiring new people that can manage this kind of constraints. So I was talking about risk, I was talking about legal compliance. So there is a fierce competition among peers, and then it brings higher salary, higher package, and then it's definitely a threat for us in terms of, profitability. That's clearly what is ahead of us to maintain the attractiveness of Luxembourg. So we as manager, we can provide attractive package, but the government, the country as a whole needs to set an attractive tax scheme, which is not very the case anymore, in my opinion. The University of Luxembourg or other schools may train people to be in line with the need of the market. It's more and more difficult to find relevant people, and we are suffering as well from the competition from the CSSF itself because they are hiring a lot of people, talented people sometimes.
I think also we need to improve, as I said before, the banking depository service, make it more attractive, make it more speedy. I think the CSF is doing a good job, the LPEA, to attract. And then also the legal, I think we have some of the best legal firms in private equity in Luxembourg, be it from setting up the fund to the M&A skills, etc. So I think we have everything in place to further increase our AUM. Yeah.
Luxembourg is a small country, it's a nice country, but still a small one compared to European capitals. So for attract the most talented people, we need to offer something else. So it's kind of a quality of life. And I think that the younger generation is seeking this quality of life. Companies offering, a hub near to the border, and I think that's clearly one interesting topic.
We know there's many stories about people coming to Luxembourg, probably for 1-2 years, and after that, they don't want to leave. So you need to experience what Luxembourg can offer. I have to admit also, and I'm not working for the Ministry of Tourism, but the city also has changed a lot from a cultural point of view, from the different facilities. So everybody recognizes that Luxembourg to live is a great place. Now to move on the professional side, what people probably forget about Luxembourg is it's very international, of course, but also the leadership, the way we approach people is very different, in my view, compared to big cities. I think we have a soft approach also to deal in a professional environment with people, and they fully recognize that. When I just talk to the CEOs of my clients, the different service providers, we see also that we have made a lot of effort to combine this listening aspect with our people, providing different retention program. I think that makes a big difference for people. I know plenty of stories I can tell of people living in Luxembourg, after 4 years, as a young guy, wanted to explore Paris, big cities, but coming back after 2 years and saying, actually, I've even done a world trip, but Luxembourg actually is a place I feel international, and I feel there is a career growth that not so many cities can offer. And I feel also Luxembourg is a very much meritocratic aspect. We don't care actually where you're from, what are your studies, as far as you can develop, and you have the commitment, to develop also the firm and the country. It will make, there is no limit for you to end up. So that's also a key aspect, and I think we need to promote a bit of Luxembourg. That is not very well known. We see that, with all the candidature we receive, all over the place, that definitely Luxembourg is a key jurisdiction.
I think in terms of talent, until now in Luxembourg, we had a lot of talent in terms of back office. That was historically there. I think now, there's two ways. We're seeing the university is there. The University of Luxembourg is there, and they are giving private equity courses. We saw the LPEA does organize certificate courses. So I think from the batch of students that are going to come out now in the coming years, there'll be a lot of talent in terms of private equity, probably more on the investment side too. So that is one source. The second source, I think there is definitely a lot of talent present in Luxembourg, and there needs to be a scale up within each fund, a private equity fund, to train their teams.
And we're talking about complete transformation of the workforce into higher value, higher creative jobs that allows people to work at the top of their operating license. And this is a really exciting time for talent management, because you can help people both move in terms of transitional skills, as opposed to having to go back and start again. And more importantly, you can bring those people who are at the end of their careers, those legacy-focused people, in with the people at the beginning of their careers and help create an opportunity for knowledge transfer, because there's a fantastic opportunity with our aging populations to tap into that great breadth of knowledge on an industry level and bring that to those that are actually now climbing the ladder.
I know a lot of people who are great investment managers, born, brought up, studied or in Luxembourg, Benelux or France in the region. They usually move to London or Paris to do it, and how to keep them is to have the private equity funds locally move their investment teams here. I think in terms of legal, there's nothing to say. We have the best talent here. I think in terms of AIFMs, there needs to be definitely an improvement to have more AIFMs who know how to handle illiquid assets. The talent is there. They need to do, for example, we're very happy, but we're one of the rare ones who found an AIFM who are going in that sense. What is important is in terms of distribution, I think local banks, private banking sector, they should take a more larger interest in illiquid assets. Their clients are going directly to the platform, they can invest directly, and I think the local Luxembourgish banks have a lot of work to do still. And this is an asset, they need to get their head around it, they need to accelerate the process to distribute this. And this, I think, is, I don't think it's a lack of talent, I think it's a lack of initiative at the board or management level, that they really need to start proposing this to their clients, because otherwise they will go direct, or secondly, they will change banks.
We would like to share our knowledge and know-how with the ecosystem. We can do that partly at the academic level, teaching everybody how to cook at the early stage. That's easy. But I think it goes more than that. For example, as we build out the quantum computing fabric of this ecosystem, we can identify those missing pieces and work collaboratively with government to bring those founders from around the world into Luxembourg to safely land them and expand them. And that's really our focus. And lastly, to put a beautiful big fat feeder here that helps to tap into the family offices to support our global fund ambitions.
The private equity sector is still kind of highly manual, and so that's why the technology, we had a complete conference around that topic a few years ago. Technology is important in our eyes, so it will help to automate the different processes, it will help to deliver quicker and better quality.
We've had a wonderful experience working with ADEM in helping to bring the necessary talents for our founders into the ecosystem. I think we're going to grow our talent from our founder pool as opposed to necessarily R3I's pool. And maybe on the fund side, over time, we'll bring in a few partners to lead our new funds. But for now, I think our real focus is on growing the companies that live in our portfolios.
Certainly some jobs might suffer a little bit from that, but that's really part of the industrial revolution, if you can call it like that, so that new jobs will be created where then we could use and combine AI tools or services with also human intelligence.
The profile we're looking for in general, whether it's in our firm, KPMG, or with our clients, have definitely evolved significantly. Before you had to be like an accountant, to work in a big four on the audit side. Today I can just tell you that probably 1/3 of the people we hire have a different background. They coming from a scientific, business analyst is very important, obviously. IT, low coding is, this is what we expect also from anyone. And if, I have 4 kids at home, so this is the number one criteria I push to them, learning low coding, IT skills, because with the new technology coming, if you don't know about the new technology, IT, I think even you are a good accountant, you will be lost in this world and the world to come. So this profile are very welcome. Usually, in Luxembourg, we expect people only to speak English. If you speak obviously French, German, or any other languages, it's a plus. But international aspect, that would lead to only English, which I think it's a good factor also here. We like people with different experience. The more experience you have, that's the best, because on top of the technical skills that we are looking for, obviously, the soft skills relationship is also key, especially on private equity houses. It's an industry where you speak to investment team, the C-level. So obviously having this, the skills to develop relationship, be able to answer questions, show your skills, it's also something very important. But I can tell you, this new generation, they are very good at that. I'm amazed when I see them presenting, in front of all the partners after 1 or 2 years. They are very much better than what I was way before that. So it's a great generation. We need to listen to them more than trying to push, our views. I think that's what makes a difference.
So it's a great opportunity for people to learn and diversify their knowledge, I would say. This is what I have been able to observe during my almost 10 years of experience as a recruiter specializing in the financial sector. I've been covering the entire investment value chain, and it gave me the possibility to understand perfectly what each stakeholder does and how they collaborate with other links in the chain. This needs to be discussed at a national scale. For example, although the cost of living is similar to other European capitals, it is not enough compensated by the city's international attractiveness and reputation in terms of size, entertainment, etc. And in a context in which the labor productivity is growing at a slower pace compared to other countries in the European Union, now more than ever, we must be pioneers and stay ahead of tomorrow's trends. So what we need is to keep working on our nation branding and develop certain things that are not directly linked with the financial place. For example, we can mention the need to go further into the diversification of the economy, and it will benefit the local private equity sector as well. But in this field, Luxembourg has taken the right path, I think, as we have become a European hub for fintech in this current context of strong digitalization. We have over 500 fintech-related startups in Luxembourg, which is huge for the country. Apart from that, Luxembourg suffers from what I would call a lack of training opportunities for future local talents. Indeed, Luxembourg faces an additional difficulty that other markets do not have, which is the insufficient production of qualified local workforce, requiring talents to be attracted from other places, often at a higher cost, thus impacting the local competitiveness of the market. That is why, with two other partners, we took the initiative to establish a private business school named L22 School of Business. The aim is to locally train young students in the specificities of the Luxembourg financial market in order to meet the demand for skilled labor more easily and become less dependent at an international level.